Is there anybody here who has ever read or heard of a book called Marksman? Got one? Okay. Marksman is also a standalone trading methodology that uses price pattern and indicators, interestingly enough. And let's see if I can show you how it works. Some crude back there. Okay, in the Marksman, this is the screen that I use for Marksman, and I use my laser pointer to delay these things for you. This right here is the same 5-period RSI that I continually use in almost everything. Remember what I said about you use different things and then you don't have these years' experience as a trader? You ever notice this 5 RSI? It's with me everywhere I go, boy. Any of my methodologies, it's still the same frame of reference. This next one is a 9-period slow stochastic. Now, the only reason I use a stochastic instead of a 9-period RSI, they'll give you very similar signals. The only reason I use a stochastic instead of the RSI is just to make the screen prettier. You know, instead of looking at 3 identical squiggly lines here, I just created 3 different oscillators so they look different to me. You know, there's no real benefit to it. The important thing about this is that I'm looking, all indicators measure momentum. All of them are some measurement of momentum, and the length of the indicator determines how far back you're looking for this momentum. You know, what length time period are we measuring momentum on? And so this is a 5. This is a 9, and this is a simple oscillator that's the difference between a 5-period moving average and a 22-period moving average. And when I originally looked at this, I looked at it on daily charts. So I kind of said, well, this is about 1 week worth of daily charts. This is about 2 weeks, a little quicker. Since I was a little quicker on 2 weeks, I went out to 22 here, so I'd be a little longer than 4 weeks. Okay? And there's nothing magical about these. It's not like these are the ultimate parameters. These are just what I use, and again, for my frame of reference. And what I look for here is divergence in at least 2 of these indicators. Okay, the divergence like we see in the RSI here, and like I've been showing you so far this week, that's only one thing. That's divergence on a relatively short time frame because it's just a 5-period indicator. I want to see divergence on another time frame too. I want to see a longer term momentum indication that tells me there's divergence there as well. And if I can see it on at least 2 of them, that's my initial setup. Now I'm interested, right? Now I think I might have something. And what I'm looking for then, after I see divergence in at least 2 of these indicators, is a price pattern. Simplest price pattern I can imagine. We make this low, okay? This low is divergent in this oscillator. It's divergent. It's actually divergent in all of them, isn't it? See that? Okay. After making this low, I'm looking for an up close followed by a down close. That's it. Can't be any more simple than that. An up close followed by a down close. Doesn't have to occur the very next bar. I could have 3 or 4 up closes in a row before I get a down close, but the area of the chart that I'm interested in is after I have this divergent low, I want the market to go up and give me an up close followed by a down close. Okay? No limit on how many bars it takes. If it takes 7 bars before it goes down, I'll still look at it. Okay? When I have this up close followed by the down close, I place my buy stop right over the high of the down close bar. And my stop is below the isolated low. Below whatever that divergent low was.
I'm sorry, where'd you place your stop?
Okay, the entry is 1 tick over the high of the down close bar. Remember, I'm looking for an up close, down close, and I'm discussing this from the buy side. It works absolutely the same way from the sell side, but I'm discussing it from the buy side here.
1 tick over the high?
1 tick over the high. I'm looking for up close, down close, right? The bar that makes the down close, my entry is 1 tick over the high of that bar. And my stop loss to control the risk is 1 tick under the low of the bar that created the divergence, that divergent low. in this case here. Now I'm actually showing you a trade here that doesn't happen because I'm a mean guy. No, I'm going to show you a trade that doesn't happen because it does happen here. But this is a setup. I have the divergence. I have an up close followed by a down close. I want to buy over the high of that bar. Now that will remain true regardless of what the bar chart does next. I don't care how many bars it takes. If this chart had gone sideways through here and didn't take out that high until here, I would have still bought it, provided I haven't made another lower low and it's still divergent, that the oscillators haven't turned down and made a lower low. Okay? That buy signal would remain in effect as long as those two things are true. As long as the oscillators are still divergent, haven't turned to go to new lows, and as long as price hasn't gone to a new low. So the reason I'm showing you this one that didn't work is because on this day, I'm placing a buy stop one tick over the high of that bar. But what happens? This bar goes to new lows. Whoop, okay, cancel that setup. That's not there anymore. We've gone to new lows. I got to start over again. Okay? What do I want to see now? Is this divergent? Yeah. It's divergent in all three of them. Okay? Great. Now I have the possibility again. What do I want to see? I want to see an up close followed by a down close. Well, here again, it gives it to me immediately. The next bar goes up, the next bar goes down. So I have my divergent low, up close followed by a down close. My buy stop goes one tick above the high of that bar. Okay? Everybody follow me? With me so far? Okay. The next bar is an inside bar. Doesn't trigger my buy spot. I do not get in the market. Has anything changed? As of the close of this bar, all three of the indicators are still divergent. Haven't made a new low. Nothing's changed. I'm still buying one tick over the high of that bar right there. Okay, I don't move the stop down to the new bar. It is the high of the down closed bar, and it remains there. No changing of that. Okay, we get entered into it here. That's the bar that takes out that bar's high. That's where we buy it. Stop loss would go below this low here, which is the lowest low. And again, as I so often do with methods like this, whatever that risk is, I use a profit target that is some derivative of that, some percentage of that, either equal to the risk, double the risk, half the risk if you want real high accuracy. But what I would suggest to you is this particular pattern does not set up terribly frequently. Okay, we were looking at that GTI signal. This doesn't set up as frequently as the GTI signal. It probably doesn't work as often. I mean, we're only talking 3-4% different in terms of accuracy, but when it works, it tends to identify bigger moves. It tends to identify a more significant thing occurring. So my tendency when I trade this pattern is to look for a little bigger profit targets. You know, I'm pretty comfortable with a lot of other things I do with my risk and target being the same because I'm able to get a pretty high degree of accuracy trading that way. This particular pattern, I'm more inclined to look for at least twice the risk simply because it tends to give it to me a high percentage of the time. And in fact, if you have any trailing stop methodology that you like, which I don't, but if you have any trailing stop methodologies you like, this is a good one to trail because as you can see in this case, the move off of here can really be extreme sometimes. Okay?